holy crap, this is really the future of how Bitcoin is going to be adopted by corporations, and intelligent leverage is going to be the dominant way to go. It's about buying Bitcoin in the future at a discount, or buying Bitcoin today at a discount. You're issuing debt to people in the future saying that I'm going to pay you this much when I know that Bitcoin is going to appreciate more. As long as Bitcoin appreciates in dollar terms 7% per year on average over a 5-year period, everything on the back end is guaranteed. So should Strategy have an mNAV of 30? More than it should have one of 1.5.
The Blockworks Digital Asset Summit, crypto's premier institutional event, is coming back to London this October, the 13th to the 15th. You'll hear from top names across global finance, DeFi, and policy. Think BlackRock, Circle, Coinbase, and the UK Parliament. Notable speakers already locked in include Danny Masters from CoinShares, Jeff Park from Bitwise, and plenty more to come. There's also a VIP dinner on October the 13th. That's for speakers and VIP ticket holders only. It will sell out. It's all happening at the Old Billingsgate in London. Use code SUPPLY100 at checkout for £100 off.
Quick reminder, nothing said on Supply Shock is a recommendation to buy or sell any investment or product. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.
Hey everybody, Pete Rizzo, the Bitcoin historian on X, here to welcome you to another great episode of Supply Shock. We've got an amazing special guest, Ed Juline, organizer of the Bitcoin Treasury's Unconference in NYC. You may have seen it on Twitter, of course. An amazing lineup of speakers there, but an event that has really captured the zeitgeist of what's going on in Bitcoin. But Ed, a diverse background, also doing Bitcoin strategy with Arcadia B, a new Bitcoin treasury company that's merging within the Mexico market and taking the strategy that Michael Saylor bootstrapped into another new and exciting market. And of course, Ed, there at the very beginnings of this trend that is now taking the whole crypto world by storm. Ed, welcome to the podcast.
Thank you very much, Pete. Honored to be on your show. You're a legend.
Appreciate it. So let's dive in, Ed. You were pretty early to this Bitcoin treasuries movement, just seeing the opportunity that was created by Strategy, being part of the team that executed that strategy. When, you've been in Bitcoin for a while, I think as far back as, 2014, 15, this idea that, a company would acquire Bitcoin, a public company, when did it hit you that this was going to be the big trend?
I actually bought my first Bitcoin in 2011, but it wasn't until 2015 that I understood what the hell it was. I thought it was just a gambling token before that, but went through all the different phases of, altcoins and NFTs and then freedom money and sound money. And I've been through it all, working at Mara, working at Bitcoin conference. And when Strategy called and said they needed help with their conference because they were too busy buying $1 billion of Bitcoin every week, you jump at the chance, went to Strategy, and you get to see, what goes on behind the scenes. And I mean, it is an incredibly disciplined team. It is an incredibly thoughtful and process focused team. Everything that they do is really thought out and planned and executed, looking way into the future, which is really amazing. Although, I was aware of what Strategy was doing the whole time, and I was cheering with Saylor the whole way, I didn't take that step to understand what it really meant to then go and invest in MSTR like everybody else. And I don't know, I'm trying to remember. I always say that we should have all kept a journal throughout this whole process, which you've probably done, to remember what we were thinking exactly back then. Even when I lived in Amsterdam 17, 18, what was I thinking when I met Craig Wright? What was I thinking when I met Vitalik for the first time? And it just, the space moves so fast. So it wasn't really until I got to Strategy that in the first month of just getting the fire hose that I went, holy crap, this is really the future of how, Bitcoin is going to be adopted by corporations, and intelligent leverage is going to be the dominant way to go. Getting that unlock to institutional money, getting that unlock to fixed income is just been probably the most massive unlock that Bitcoin has come across in its history.
Yeah, obviously, I think one of the the big things you hit the nail on the head there, just how long it took MicroStrategy to really be broadly understood, right? I mean, Michael started buying Bitcoin, profits from strategy, then MicroStrategy back in 2020, and it really has been this march of years, that it took for the ecosystem to wake up. Flash forward to today, we've got 300 companies knocking on the door of holding 1 million coins. But you took us into the boardroom there of kind of this idea that these companies can kind of get access to a new kind of realm of capital. When did it really hit you that this was actually something that was going to really take off outside of strategy and sort of become ecosystem wide, as we've seen?
I was at the Bitcoin for Corporations conference put on by Strategy in 2023 in Orlando. Yeah, okay, great. This is what corporations are doing. 2024 in Vegas, and Dylan LeClaire was there, and him and I were off to the side just talking for a minute. And I asked him, I said, hey, where are you going from here? And he's like, I'm going to Tokyo. I'm like, okay, there's nothing Bitcoin in Tokyo. What are you doing? It's like, no, I just going to visit. Of course, he couldn't say that he was about to go and launch Metaplanet, and it, had this big deal in the works, and Metaplanet was one of the first ones. I don't remember if Semler had already announced yet or not, but it was between May of 24 and May of 25 that there was just this absolute explosion. At the Strategy Bitcoin for Corporations conference in Orlando in 25, when Fong got on stage and said, there's going to be 700 by the end of the year, and I kind of remember us rolling our eyes and going, there's not going to be 700. But then within an hour of thinking about it was like, damn, there's going to be 700. It's like
1,000. Yeah.
Yeah. Well, public companies, right?
Right.
But the people at Strategy just have that kind of vision, that have that kind of commitment to where it's going. Me personally, I went to Strategy to help them run a conference to see, what are these guys, how are they making the sausage? And it was within a month that I, had shifted all of my money out of Bitcoin and into Strategy.
Oh, really? So you went all in on Strategy and out of Bitcoin?
No. Did I say that?
I think so.
Is Predator watching?
We might have to run the clip back. But I think you're speaking to the interesting part, right? That's what the investors at home, I think, are trying to figure out, right? Is these companies have become a way to outperform Bitcoin and have outperformed Bitcoin, right? MicroStrategy for years outperforming Bitcoin.
Yeah, well, I mean, it wouldn't be a good Bitcoin podcast without a conspiracy theory, but I can't help but wonder if the whales are doing the same thing. If they've figured out intelligent leverage and they're getting out of their Bitcoin, buying into Treasury companies to get yield on their Bitcoin. I have no proof of that. I have no evidence of that, but it's just a thought that keeps entering my mind.
It's provocative and interesting. Like, well, tell us a little bit about the intelligent leverage piece. You keep using that term. Maybe break it down for us. This is just the idea that companies have access to different types of capital raising than the average individual.
Yeah, absolutely. It's about buying Bitcoin in the future at a discount, or buying Bitcoin today at a discount, depending on how your financing works. You're issuing debt to people in the future, saying that I'm going to pay you this much when I know that Bitcoin is going to appreciate more. I remember watching the Saylor's quarterly earnings call in the lounge at Strategy, the one from January, I think it was. And he spent 2 hours talking about everything that Strategy does on the back end with Strike and Stretch and Strive and Stride. And I said, this is just spreadsheets. I mean, I've kind of seen the spreadsheets, where all this is done. And none of it is magic. None of it is risk oriented. It's just the back end spreadsheets of what happens once you have Bitcoin. Saylor mentions it in that earnings call that, and I think I get this mostly right, that as long as Bitcoin appreciates in dollar terms 7% per year on average over a 5-year period, everything on the back end is guaranteed. When you say I believe in Bitcoin, I hate it when people say believe in Bitcoin. It's not Santa Claus. When you know what Bitcoin's going to do over the next 5 years, 10 years, whatever years, 7% is just a given. And so you've got this asset that is going to appreciate 7% per year on average. Here's all this back-end financial engineering that generates this intelligent leverage towards buying more Bitcoin per share and getting that yield. It's kind of a no-brainer.
Well, I think that's the part that trips people up, right? Even myself as a longtime Bitcoiner, this idea that the CAGR of Bitcoin is certain. And obviously, I've seen Bitcoin appreciate from, a handful of dollars, in the early days to what it is today. So, every belief that Bitcoin is going to continue to go up over time, but it doesn't seem like there's some people who kind of balk at this idea that you can quantify it, or it just seems uncomfortable. You have to have a large amount of conviction, or I guess what got to get you over that hurdle to really thinking that you can quantify Bitcoin? Because I don't know, as I've seen, Bitcoin tends to kind of wiggle its way out of definitions very easily from what I've seen.
Yeah, I think what did it for me was working at Mara. When I worked at Mara, and although I was working on a sidechain project, I was involved with what they were doing with Mara Pool and how they run their business plan, in the sense that, you know, they have a 5 to 10 year business plan on when they're going to buy more miners, when they're going to sell miners, when they're expand capacity, pre-halving, post-halving. You know, it's another spreadsheet, and it just depends on what the price is and what the cost of the miners is, what the cost of electricity is. And it really opened my eyes to the cycles. I don't know if I believed in the cycles before or not. I mean, I got wrecked in 22, I got wrecked in 18, I got wrecked in 14. And in 22, it was brutal. I just got wrecked, and I'm sitting there going, how did I do this again? So I'd been telling myself I was going to sell in 26, but I didn't know why until I saw how the miners treat the cycle. And then, you know, I was orange pilled by Michael Tidwell in Atlanta by going through a code review. And you see the beauty of the code, the beauty of the math, how the miners work. And then you get into Giovanni's power laws, and you just go, you know what? This is a discovery, not an invention, a discovery of sound money. And if it's a discovery, well, what's another discovery? Gravity. What's another discovery? Evolution, whatever. I sometimes feel like for Bitcoin to not follow these cycles and go down and go up and continue to go up based on dollar depreciation, that would be like the Earth taking a trip around Jupiter. You know, it won't happen. Gravity does what gravity does. Sound money does what sound money does. I know it's out there, but, you know, it really feels like that much of a phase change in our way we look at money.
When you talk about cycles, you know, the big question on this podcast has been, you know, is this time different? We had Bitwise CIO Matt Hogan coming on the podcast, giving a pretty impassioned, argument that this time is different. One of the data points really was how much Bitcoin these Bitcoin Treasury companies are buying up. I think, you know, this year closing on 160,000 plus, which is essentially more than the miners have mined. So given that you just spoke to your own conviction in the cycles, this is something that I'm struggling with as well. You know, I've clung to this idea of cycles. I've used it for my own kind of personal budgeting and analysis, but is the demand from the treasury companies just so great that it overrides that? Are you changing how you're thinking about the cyclical nature of Bitcoin?
Yeah, this is my opinion. This is not financial advice. When Matt talks about this time being different, I struggle with the way he puts it. And this time is different. This time is different. It's just one of my favorite phrases, because that makes me believe more and more that, yeah, we're going to have cycles. So there's a fantastic series of videos on YouTube called The Physics of Bitcoin. Great. It talks about the cycles. It talks about the code, talks about the math. The stuff they do in the power laws. It shows that this is following a mathematical pattern. It really gets to that point in the dragon eating its own tail that you're going to get this retail explosion. And I think what Matt might be missing, sorry, Matt, we're friends, is that we're going to pop up here by the end of the year to 300, 250, whatever. And that's going to be too much. And when it gets too much and it gets too high, then that's when you come back down. So there are the people that are saying, nope, we're going to be in this steady, slow cycle that keeps going up. But that's not what the math and the code says. It says that we're going to get this hype, this overblown, spike up. And then the down part is the recovery from that overextension. Get other people that say, no, we really even haven't had 3 cycles. We've only had 2 cycles. It's just a fantastic area for debate. And we'll find out next summer who was right.
Well, one of the big accusations that's being leveled around is that the Bitcoin treasury companies will cause the next bubble, right? This has been said on this program. It's been said on others. And so there's this idea that, the Bitcoin treasury companies are, essentially, becoming over leveraged, or that they might pursue debt, so much debt that they'll essentially have to become net sellers. But these are very different companies, right? Like a mining company has a tremendous amount of overhead in terms of electricity and machines. And with the Bitcoin treasury companies, that's not necessarily true, right? A lot of these companies are, in some cases, just, Bitcoin acquisition businesses. They're not, they don't have the kind of CapEx and equipment costs that we've seen with, these other businesses. So is there something different about the Bitcoin treasury companies, you think, that will just, maybe they don't have to become net sellers during the drawdown?
Well, it'll either be that a few of the companies on the bottom of the list will screw things up. They'll figure out a way to lose their Bitcoin or go bankrupt, or their underlying business will turn into a hole. It could still be that we have a massive alt season, and then that alt season gets blown up, and then that's the bubble that bursts and it brings Bitcoin down with it. The paper Bitcoin guys are still going crazy about these ETFs and exchanges not having the Bitcoin they have, which I don't believe. It's really hard for me to believe that a publicly traded company that's audited by a big four accounting firm really doesn't have the Bitcoin it has. So there could be all kinds of other reasons. And I think where my philosophy is that it doesn't matter. The ETFs were a reaction to Bitcoin's model. The treasury companies were a reaction to Bitcoin's model, that the supply grows linearly for all intents and purposes. It tapers off. And so instead of us thinking that we can affect the price of Bitcoin, yeah, in the short term we can, but in the long term, Bitcoin's going to do what Bitcoin does. I mean, as I think I've heard you say before, Bitcoin doesn't care. Bitcoin's going to keep producing blocks, and the rest of us react to it. And so whatever that next thing is, if it's treasury companies, or if it's institutions, or if it's sovereign wealth funds, or if it's retail again, they're reacting to Bitcoin, not consequentially affecting its trajectory.
Yeah, I think my defense of the treasury companies is really, we should have expected this, to happen, right? If we think Bitcoin is going to become money, then eventually companies will adopt Bitcoin as money. And, these are really just the first class of companies that are denominating their success in Bitcoin, but also the investors, of these companies, seem to now have the expectation that their returns will be denominated in Bitcoin. So I was wondering if you could speak a little bit to this phenomenon. We've seen a number of Bitcoin treasury companies over the course of the summer. While Bitcoin has maybe gone sideways, they've seen drawdowns, right? So they're not, their price performance in terms of, the stock isn't really, necessarily linked to Bitcoin or the value of their Bitcoin. What's your take on this? This kind of era of more malaise of the Bitcoin treasury.
Are you going to say mNAV compression? You going to say it?
I was trying to address it in a more general term, but
yeah. I love it when new terms come in. It's like if you look at the Google Wayback Machine for ordinals 3 years ago, it wasn't there, right? It wasn't even a word, and then all of a sudden now it's like you said, the zeitgeist. Where the mNAV compression is short sellers putting pressure or investors not knowing which treasury company to put it in, I don't think really matters in the long term or even the medium term. Of course, it's affecting everybody in the short term when Metaplanet goes from an mNAV of 7 down to 2. But Jeff Walton and Ben Workman and a couple others, they look at the mNAV of NVIDIA, Apple, Tesla at 30. And then you look at the mNAV of Strategy and these companies and Semler at 1 something. And what is mNAV? Well, and it was Sharish at Strategy that told me this. mNAV is a measure of the confidence in the store of value. So if Apple has an mNAV of 30, that's the investors saying we have a lot of confidence that this company is still going to be around. We don't think it's going to grow by 30 times. For God's sake, it couldn't. But we are confident that that company is going to grow or it's going to be around. I mean, even Waste Management has a decent mNAV because it's like, yeah, people still need their trash picked up. But as we've seen with Intel, Intel just disappeared because they lost the technological advantage. NVIDIA could be crushed tomorrow by some other technology, or somebody says, hey, I can do ChatGPT on a toaster. I don't need all these fancy chips. And so where do Bitcoin's treasury companies fit into that are going to continue to raise capital to buy more Bitcoin on a pristine asset that we know has a CAGR of 30 over the last so many years? It just makes absolutely no sense that people wouldn't look at these treasury companies as an extension of Bitcoin that then deserves a higher vote of confidence in its store of value. So should Strategy have an mNAV of 30? More than it should have one of 1.5.
As you look at the market and thinking about, where are the winning opportunities, obviously you're taking a position at a company that's in an emerging market in Mexico. There's a lot of confidence, I think, right now in this idea that there's a global arbitrage afoot and that, there will be geographical winners, or that geography really could be, one of the early differentiators of these companies. Certainly we saw that with Metaplanet. Do you think that is, sort of where we're headed with the Bitcoin treasury movement, that they'll essentially be a winner in most of the major markets?
Yeah, there kind of has to be, because there's untapped capital in those markets. I'll speak specifically to the Mexican market. You have Afores, which are retirement accounts. You have fixed income bonds in that market. The family office money, almost all of it is outside of the country. So we can't really tap into the family office market in Mexico because that money is all in foreign equities. Not all, but to the most part. The challenges in Mexico, for example, are that only one company has been listed on Viva in the last 5 years, one new company. So we have to list our company. It takes 18 months because of the bureaucracy. So we have to have a totally different plan than a lot of these other companies in markets that have more efficient capital markets, more efficient listing processes. I joined Arcadia because I lived in Mexico for 13 years, fluent in Spanish. And when I met the two guys who had started it, they have an underlying business, which is a Bitcoin exchange business, very similar to River. And great, there's a way to get Bitcoin. There's a way to grow that business in parallel with the Treasury. And so what you're doing essentially is you're looking at all these check boxes and saying, how many of the check boxes do they have? Good management team, existing business, access to capital markets, et cetera, et cetera, et cetera. And it just really appealed to me. And getting a good team together to be able to take a nice slow plan to acquiring Bitcoin at with a positive yield month to month, quarter to quarter really made a lot of sense. In other markets, it's just clear that Simon and Dylan have figured out Japan. Webley in Smarter Web Company in UK seems to have found his niche. And so, yeah, I think there's going to be one in every country as long as that company has sufficient capital markets and money in it.
So where do you fall on this? There's this, I think there's two ideas. One is there's a sort of a winner takes all, there's kind of one company that captures this in each market and sort of corners the market. And, maybe this is a limited opportunity. The other thesis kind of states that, no, Bitcoin will just kind of be on every balance sheet. And eventually, you'll sort of have, all companies will be Bitcoin companies to some extent. Where are you on this spectrum? Do you think it's going to be sort of, especially in markets like the United States? If you look at BitcoinTreasuries.net, you go Canada. There's 20 companies, in the public markets, sort of all competing, looking for a differentiator. US, upwards of 100 companies now. It seems hard to think in the short term, at least, that these companies, they are competing for investor dollars. No,
I'm definitely on the spectrum. It's hard to know so far because as I think something that some people are working on is some kind of measurement system, some kind of classification system of knowing, how do we rate all these companies? Does strategy truly check all the boxes, or is there actually something that's a weakness of theirs? Do you need an underlying company? Do you have to have a rabid investor group? Do you have to have an options market? And I don't think anybody has figured that out yet. Is there only one in each country? No, because somebody's going to tell a story differently or better than another one. There will, be more and more companies that are doing it on a more GameStop, Tesla type approach of part of their treasury. But, Apple is a T-bill treasury company. Tesla is a partial Bitcoin treasury company, and Strategy is a full Bitcoin treasury company. So, who's the biggest Bitcoin company in the world? Is it Strategy because they have the most Bitcoin, or is it Tesla because they're the biggest company with Bitcoin? It's questions that people like you and me are going to be making lots of podcasts and talking to people about to get through in the next couple of years.
Well, I think, one of the fascinating things is these metrics. There's lenses to look at companies and sort of, one of the ones that I've found the most provocative is this idea that if you look at, a Tesla and an Apple, the market cap of Apple and Bitcoin is, 300 through, it's larger than the market cap of Bitcoin, right? It's larger than 21 million Bitcoin, right? So if you were to look at the actual, how much Bitcoin is Apple worth, right now, I think Apple's a $3 trillion company. So, it's higher than the total market cap of Bitcoin. So there's this idea that, companies will have to compete for the 21 million share of the pie. And essentially all this capital will eventually find its way into Bitcoin.
Yeah. Strategy's got it's not even a head start. It's they've already kind of won the race in terms of being, the largest Bitcoin treasury company. If by some unforeseen act of God, Apple said, we're taking our whole T-bill cash reserves and buying Bitcoin with it. I don't know if with their cash reserves, they could even beat. Yeah, I think they still could. They still have enough cash on hand to get ahead of Strategy, but we just know that's not going to happen, right? Nobody at Apple's going to take that career risk. Their shareholders would never go for it. Their mNAV would compress. It would be a bit of a mess. So, but the whole discussion around how much Bitcoin is left, I kind of get lost in that discussion because there's still 100 million Satoshis. And so we'll just shift the scale of the conversation. So at a point at which a company says, last week we bought 1 Bitcoin and that Bitcoin's at 4 million. Well, that's still a story, maybe. We're just talking about smaller shares of the Bitcoin, but there's still tons of availability. Does that make sense?
Yeah, of course. There's all these people looking to sell as the Bitcoin whales of the recent months. Though of course, as you said, maybe they are rotating into Bitcoin treasury companies. Maybe since you talked about investing in MSTR yourself, do you keep a portfolio of these companies? How often are you sort of rebalancing them? If so, do you take an approach of analytics to your own portfolio there?
I have MSTR, I've got Metaplanet, and my retirement accounts, some OwnB, the Bitwise
index, yeah.
Yeah, I like OwnB a lot. It just gives you good exposure across all of them, so that you don't make the wrong decisions. I've still got some Bitcoin, but then I've talked about this on Charlie Spears' podcast last week, that I've come to just not trust my feed at all. It seems like I get in my feed where it says, sailors going bankrupt, all these treasury companies are going to zero. And I'm like, that's the time to buy. My feed was literally telling me last week that Taylor and Travis are breaking up, and then 24 hours later. And so you get to the point where you just don't trust your feed and you go, okay, I'm going to just do whatever's contrary to my feed. And that seems to be more lucrative. So when do you make those decisions to rebalance or move something? It's just when you get to that point that you have the confidence to do it. Sometimes I'll sit on stuff for 6 months, and sometimes I'll make a decision and 2 weeks later realize that I was wrong.
And so for somebody to come into the space new, though, do you because again, I think this is the where this movement kind of strains a little bit with like kind of the Bitcoin orthodoxy, right? Is we do want people to be buying and holding Bitcoin themselves, right? And I guess, how do you onboard? Has it changed how you onboard people to Bitcoin when you're talking to these institutions or people at these institutions? Has it changed how you talk about Bitcoin and how people should get started at all?
Yeah, I mean, you know this well, and they come to you and go, hey, what do you think about Solana or Bonk or whatever? And you're like, no, just start with Bitcoin, right? The way I explain it is that there's no cryptocurrency because none of it is used as a daily currency. There's crypto asset, Bitcoin, and all the rest are crypto companies. There's people involved. And so if you're okay with having some person screw something up or, have an employee issue that goes public and that crypto company coin goes down, then you're gambling, and just treat it as gambling. Bitcoin is the only thing that's sure to be around, in a given period of time from now. Lately, what I've been doing is saying, okay, there's Coinbase, it does this and that. No, and I'm not sure about that. There's Unchained, you can get multiple keys. Okay, maybe. There's River, you just ACH, fine. There's the ETFs, and they take a percentage. Just let everybody kind of pick their path into Bitcoin. The other angle on that I find really interesting is, I'm talking to a lot of companies that provide yield on Bitcoin. And, they all have different ways of providing that yield. They may take your Bitcoin, lock it up, and stake it on an altcoin chain. You get yield in those altcoins, and then you get your yield back in Bitcoin. Okay, it's safe. It's technically locking it up. Great. There's other ones that they lock it up in a multi-sig. They use that as collateral to buy T-bills. They take half of the yield and you get half the yield. The question isn't, I think, the security like it was with an FTX or Celsius, where they were out literally gambling with your money. That part has come kind of locked down, where there's visibility, there's transparency. The question I think that's being risen with Bitcoiners is, who are you benefiting by getting yield on your Bitcoin? Because there is no yield on Bitcoin. If you put Bitcoin in a wallet, it just sits there. It's supposed to sit there. So if you take your Bitcoin, you give it to someone, you lock it up in a multi-sig wallet, they use it as collateral to buy T-bills, Well, that's pretty secure. You're just locking it up in a multi-sig. You're getting two movements in and out. If you're going off to some alt chain, you're securing that alt chain. If you're using it to use collateral on some distressed real estate project, whatever. I mean, even the ETFs are a way of securing Wall Street, right? It's providing them more fees, more management fees, more everything. Even strategy is a form of locking it up to protect the shareholders of strategy. So the question isn't as much about the security. It's about who are you helping when you get yield on your Bitcoin. Some hardcore Bitcoiners say, nope, it's just Bitcoin. You leave it in cold storage, you don't touch it. But then the miners get mad at you because you're not transacting with it.
I want to pop over and talk about, it really feels like the hot subject now with Metaplanet coming out and authorizing, going to take this preferred share strategy. It really does seem to be, kind of, if you're dividing the strategy story into two parts, it's one where, the company was, starting to use its balance sheet, using profits, then, using, as you said, some intelligent leverage to then now branching out into, seemingly offering, flavors of different Bitcoin exposure along the spectrum. I mean, the analogy that I like to use is it's almost like, you're offering a percentage of Bitcoin and some sort of some sort of cocktail, right? You start with 100% Bitcoin, you can go down to 50% Bitcoin to all the way down to, you have a soft drink, 5%, sort of Bitcoin type products. So how do you explain the preferred shares? Do you like my analogy? And what's your preferred analogy for explaining what's at play here?
Yeah, no, that's a good one. I'm gonna have to think through how to use that one as well. I think the brilliant thing that Saylor did by creating the preferreds was, instead of continuing to try to force Bitcoin down the throats of Wall Street, he looked at how they play the game and created tools that are in the way that they're used to seeing things. So, Stride, for example, with it may or may not pay the dividends, and it gives them the option to not pay the dividends, so it has a lower price, it still has a higher yield. That was required as part of the risk management that the purchasers needed. They needed to see a selection of preferreds so that on any given day they can say, okay, I can go up this on the risk profile or down on the risk profile to get more yield. And so all of those options, strike, stride, and stretch, are the same tool, essentially. It's a way for strategy to get cash flow in so they can buy more Bitcoin, but they just cater to the needs of the fixed income market. And so it's a mix of different ways of getting money for Bitcoin, but at the same time, they're all based on that 7% per year. And as long as Bitcoin beats that, then they're all in the money.
I guess the question is, does it actually wake them up to Bitcoin? Because in some respects, they're being, sort of paid or rewarded here, I guess, in dollars, right? So the payouts on these instruments are, of course, Michael Saylor and Strategy, they're going out and buying Bitcoin with the money raised. But I guess how do you feel like they're actually gaining confidence in Bitcoin through these products? Do you see that happening?
My wife goes to soccer games because she likes having a beer and potato chips and doesn't really know what's going on in the field. She's still a soccer fan, right? And my kids only want to play in the streets. They don't really like going to the stadium. So they're still soccer fans. And I think it's the same with Bitcoin. That was one of the kind of real eye-openers when I got to a strategy, was that, there's all kinds of different Bitcoiners and nobody can say you're a Bitcoiner or not. One of my neighbors the other night, I got him in maybe 2 years ago, and he told me, he's like, yeah, I've still got my 8.3 shares of Bitcoin. And I didn't know what to say. I was like, yeah, okay, I'll just let him have it. That's fine. So he bought that much Bitcoin, but didn't take one more step in understanding it. But so am I going to criticize him because he put $500,000 into Bitcoin? No, but everybody's got their level of orange pilling.
I think it is still really hard for me to even understand. There's this behind the veil, right? There's this idea that these instruments are going out to Wall Street, and then these funds are kind of investing in this Bitcoin. But it's kind of like who the actors are, behind the curtain. And so when I ask that question, I'm trying to probe a little bit of I understand there's these pools of capital, right? But we talk about it in such sort of an abstract way, right? Or even just the idea of a pool of capital. That's not really what's happening here, right? What's happening is that individual investors and individual firms are, assessing these products and making actual decisions. And I'm just curious to, because we haven't heard many people talk about that process, right? I don't think I would even struggle to name right now, like some individual from that part of Wall Street who's come out and even talked about their experience. Maybe the closest one I could think of would be a Jim Chanos, right? Who's obviously shorting strategy, right? But he's putting a little bit of a face on, here's this, section of Wall Street and what it does and how it operates. Though, of course, he's, more, why his market position is sort of interesting. So I guess can you put a face on this part of the industry for us? Like, who are these players? And do you expect them is there an avenue for them to become Bitcoiners in a certain way, or even, kind of evangelize Bitcoin through being exposed to these products?
I don't think so. And I kind of get chastised for this, but the book Technology Adoption Lifecycle by Jeffrey Moore, where he talks about early adopters, early majority, late majority, and crossing the chasm. He talks about this. He says the early adopters is only a small part of the technology adoption life cycle. And, I may or may not have written an article about how, the orange pilling may be over. We may be done with the early adoption phase. So what is early majority? I think early majority is Saylor, saying, hey, all I care about is the Treasury part of this. It could be Donald Trump, who says, yeah, Bitcoin, and my Trump coin, and my, private company. The example that Jeffrey Moore gives in his book, which is really good, is, when I got my first computer in the 80s, I had to buy different parts and put it together and put jumpers and put cables and then manually configure the DOS operating system. When I think it was Dell and IBM and Acer said, we're going to do a plain vanilla box that you can't open. I remember saying, like, nobody's ever going to buy that. Who's ever going to buy a computer that you can't open and tinker with? Well, guess what? And so I think Wall Street is the people who just said, I just want a computer. I don't want to open it. I don't really care how it works. I just need to know that my spreadsheet's going to work.
But I guess when we think about these, so maybe a slight case we could put is the pension funds, right? There have been more sort of, California and New York pension funds. We've seen some sort of teachers unions from these states, they're buying exposure to Bitcoin through MSTR, through ETFs. Is that the end of the story, you think, right? Are they sort of completed their adoption arc, according to...
No, they're not. This is a really, really good question, Pete. It's hard to know how much they really know about Bitcoin when they decide to put hundreds of millions of dollars in it, other than there is a little bit of a track record. Great. They are looking on their spreadsheet at what the return is, how much they have to put in. I think the Ponzi, bubble discussions, they understand that that's over. But, how much do they really need to know? Well, I had a neighbor that worked for one of the big investment houses, and he had clients all over Atlanta where I live. And, he said, they're telling us to push this uranium mutual fund because whatever, they're going to make more commissions on it, or maybe they think it's going to go up. And I looked at him over a couple of beers. I'm like, what do you know about uranium? He goes, no, I know nothing about uranium, but they gave us a 4-pager. We did a 2-hour training on it. And now I know more about uranium than my clients do. And so, that's where we are in Bitcoin. You could get us in front of those pension fund managers, in front of those big institutional guys and say, hey, tell me about the halvening. How does it work? And they're not going to know, not going to care. But that doesn't disqualify them from being interested enough to invest in Bitcoin.
Yeah, I think I was just, curious if, those pensions and those funds, there's a world where they buy Bitcoin directly, or it seems like, this is the kind of good enough workaround as the ETFs and the Treasury companies will essentially provide that service.
Yeah. The idea of custody, the idea of, does anybody custody their own gold? I knew a guy here who custodied 2 tons of silver at home. Craziest thing.
Okay.
Yeah, he custodied 2 tons in his garage on 2 pallets. Yeah, and it's like, but do people custody their own gold? Did they custody their own stock certificate?
It's hard to run away with that much, I guess, right?
So it's trust in the system. I don't know how much the ETFs are really charging. On the day that the ETFs came out in January last year, I bought 1 share of each, and I have them in my bank account, my bank trading account. The returns range all the way from Grayscale at 157% down to the bottom one at 132%. And I've never sat down and tried to figure out why, but I bought them all within a 10-minute period. So each of these ETFs has different fee structures, different ways that they're managing it. So yeah, you're essentially getting negative yield on the ETFs by paying, the person that holds them. Does that negative yield eventually go to zero? No, because it outpaces the gains. But if it's easier, it's worth paying for. The same way that Does Coinbase charge more? I don't know. Does River charge more? I don't know. But it's like we're willing to pay that in order to make life easier. And for the pensions and them, they need the easiest path, not the one with custody and all that.
Well, Ed, winding down, I know you got a conference to get to putting together. We'll be talking about the subject soon, but strategy on the cusp of the S&P decision should be coming, maybe soon. Your thoughts on just this milestone and what it means for what Bitcoin has achieved? Yeah,
it's going to be a fantastic method to break some of the Wall Street metrics, to say that strategy with this totally different model of holding Bitcoin and their income is based on Bitcoin gains. I don't think it's a sure thing. I don't know if S&P has been able to take their, I've said spreadsheets how many times in this podcast, but can they take their spreadsheets and fit strategy into that so that it actually works in their model? Saylor brought this up on a earnings call where he said, I need you to write Moody's, I need you to write Dun & Bradstreet and get their rating systems fixed, because strategy comes up as a high risk company. And it's like, that's ridiculous. We all know it's ridiculous, but their old metrics are making it hard for this new wave to come. And so if strategy does make it into the S&P 500, that's a fantastic sign that somebody on Wall Street is looking at this differently. The same way that when BlackRock said, yeah, we're going to do an ETF, all the rest of the ETF guys must have said, oh, thank God, thank you, BlackRock. Even though you're going to take the lion's share of the market, it gave it credibility. And so whichever bank it is that decides we're going to become a Bitcoin bank, whichever fast food chain Steak and Shake says we're going to accept Lightning, they're the early adopters. They're the groundbreakers. And so hopefully strategy is able to break through this next wall of adoption, which is S&P inclusion.
Well, you got the conference coming up. You're going to have who's who of the Bitcoin Treasury sector there. Final thoughts. What message are you hoping the event sends to the industry?
Yeah, September 17th at Levon in Midtown. It'll be an all-day event. We have it starting off with Saylor doing a keynote, and then it's a very town hall structure. So no presentations, no panels. It'll be few thought leaders on stage talking about a subject, and then we'll have the mic going around the audience. No pitching, no shilling. I think between the sessions, we'll have some lightning talks, but it's going to be a fantastic event. Tim and I are putting together something. We're not sure what it is exactly. Tim's podcast gets a lot of viewers. He's done 160 of them. We're looking to partner with BitcoinTreasuries.net to see how we can kind of wrap in some more information in what we're doing. And then I think there's a lot of room for advisory, in helping the tons of inbound that we're getting on. I need a lawyer. I need a custody company. I need an investment bank. Who can I trust? Who can I believe in? And the TradFi world's going to need the Bitcoiners to tell them, how do I avoid getting wrecked?
Well, I appreciate you coming out. I appreciate you educating everybody. If you're liking the content, feel free to like it on YouTube and Rumble. Like that like button and smash that subscribe button. We'll be back with more great podcasting in the coming weeks. Of course, the subject will be Bitcoin. For now, this has been Supply Shock, a Blockworks podcast.